AMD, Advanced Micro Devices, is up 65% year to date, 320% over the last 5 years. It is on a tear. It's a company that's been high and low over the last 25 years. We're going to check it out right now. We're going to go through some news, some bull and bear cases, analyst estimates, of course, our 8-pillar process, and we're going to finish it off with our stock analyzer tool, because you're probably wondering what's the right price to pay for AMD. So we're going to put our assumptions in and come up with a price. Now, if you're new, guys, there's something in this video for beginners, advanced investors, everyone in between. Listen the entire time. Even if it confuses you, that's okay. It confused me at some point. It confused the 200,000 other people who watch this channel at some point. We're constantly learning. So let's go break it down with AMD. All right, guys. So first off, it's a $171 billion market cap company, okay? That means if you bought all the shares outstanding, that's what you're going to pay to own every single share. It does $22 billion in revenue, okay, in the last year. Now, just to compare it real quick, and of course, people don't like this comparison, but too bad. I'm going to do it anyhow. Let's pull up Intel. Intel is a $143 billion market cap, so almost $30 billion less, and they do $54 billion in revenue, $30 billion more. So just a comparison. Again, I think we'd all argue accurately that AMD has more growth potential than Intel, but it's just as a sort of value thing there, all right? No dividends, obviously. They've had a hard time making money. In the last year, they've lost money, okay? Basically broke even. The last 5 years, though, they've made about $1.5 billion a year. Now, here's what's interesting. Even though they broke even last year, net income-wise, their free cash flow is actually $1.9 billion. So that's awesome. Check mark there in terms of beating their net income. So what does that mean? Well, it tells me there was probably some special income or charge that occurred last year that did not appear on their cash flow statement. Because remember, with net income, that's affected by a ton of accounting rules. And something can affect cash flow and not affect net income, and also the other way around. Something could affect net income, but not affect cash flow. So this immediately tells me I need to look at the income statement, which we'll get to in just a few seconds. Now, gross margin here, 44%, pretty solid. They make hardware and they're making 44% gross margin. Every extra unit, every extra dollar they sell today would give them 44 cents to the bottom line before taxes, okay? As an example for Intel, it's 38%. Okay, so they have better gross margin last year than Intel has. Awesome. All right, now let's go check out that income statement to see what we were looking at there. What in the last year was a big write-off? So I'm going down the list here. Man, I'm not seeing anything. SG&A expense was about right. R&D was higher. Well, that was a big difference. Look at that. R&D jumped up. And R&D is, I don't know why maybe it's not included in how it's depreciated. Because look at their total operating expenses. Yeah, big time difference. 6.7 versus 9.4 billion. That's interesting. That's very, very interesting. Okay, that's probably the reason right there. Now, guys, if you have other reasons, please drop it in the comments below. I like to pick, next time we do a video, and first off, to help people who are watching the video, drop a comment below about what the other expenses are, because somebody's probably going to do more research on this than I would, because we're trying to get a little bit higher level view. All right, some other news on Intel. Enterprise data center momentum, that's awesome, great. But let's do some bull and bear cases. Bull cases, AMD has increased its CPU market share from 27.7% in Q1 of 2022 to 34.6% in Q1 of 2023. That's a big jump, guys. The 4th generation AMD processors are used by AWS, Alibaba, Microsoft Azure, and Oracle Cloud Infrastructure, and also Google Cloud. That's incredible. All right. 2 bear cases. In the most recent quarter, revenue fell 11% year over year. Yeah, but you know what? All the chip companies had a drop, basically. Everybody did. So I'm not as worried about that one. And as a percentage of total graphics shipments, NVIDIA holds 84% of the market share, AMD owns 12%, and Intel owns 4%. So even though NVIDIA is the clear winner, AMD is number 2 by a long shot as well, 12 versus 4% on Intel. So some good stuff there. Let's see. Okay, so here's a comment from a YouTube subscriber. The name is DDBoy002. While all this is insanely premature in my professional computer IT design opinion, NVIDIA is 5 to 7 years ahead of AMD in the AI space already. AMD will possibly catch up, but not until they can efficiently prove GPU energy in their chips, which to this day remains completely unproven. I'll keep all my money buying NVIDIA. Okay, that was 3 weeks ago. So thank you for the comment. Guys, comment below. I don't believe that's a reason to avoid AMD, in my opinion, but it's not a reason to buy AMD. I mean, not a reason to buy NVIDIA. Remember, still, you can overpay for a good thing, right? And that's what I'm worried about with NVIDIA. You know, we have other NVIDIA videos out there, so check those out. Let's go check the 8 pillars out on this company. And remember, you have our software, more on that later, but you can customize up to 12 of your own pillars. I, of course, keep the original. But guys, we have 4 checks and 4 X's. The most alarming one, so actually there's 3 alarming ones I don't like. 5-year PE is 117. 5-year price of free cash flow is 106. But guys, shares outstanding are up 66%. So what does this mean? Well, let me do the math for you. Let's say there's a company out there with 10 shares outstanding, and you own 1. You own 10% of the business, 1 out of 10 shares. If they increase their shares outstanding by 66%, they've taken their 10 shares to 16.6 shares, but you still own 1. So now you own 1 out of 16.6 shares, which is roughly 6% of the company. You went from 10% to 6% just by them issuing shares. They're diluting you as an owner. I always tell people this is the silent killer in investing. Silent killer investing. So I really, really hate this. Like beyond belief, this immediately gives me pause. There's 2 ways to fund a business: debt, taking on loans, or equity, issuing shares. They chose to do that. Now, it makes sense that the company's overpriced. Yeah, okay, great. The company's overpriced. Let's issue shares. But it still hurts you because you bought the company. You've already bought an overpriced company for the future potential. And now they're punishing you for that by diluting you as an owner. Listen, there's a lot of value investors who won't even look at a company unless shares outstanding over the last 10 years are the same or lower. So it's something to really consider about before you put your money in the hands of the CEO, because that's what you're doing when you buy the shares. All right, let's check out some analyst estimates on the company. They're expected to make $277 per share this year. And guys, look at this. According to analysts, $775 per share in 2027. That's a big jump. But even at that, the current stock price is 105. That means it's currently selling for 13.5 times 4 years from now's profit. Hey, take that for what you want. I always hear people say, 4 years from now, the company's going to be making X. And there is something to be said. Look at this growth rate on earnings per share: 50%, 28%, 31%, 11%. Big time growth. Now, keep in mind, these are analysts, and they have biases, and they have reasons to pump up companies. And in the last 2 years, there's only 2 analysts reporting on this. All right, so keep that in mind there. Let's go see what their revenue growth numbers are. Revenue growth, huge, from 23 billion to 38 billion. Still won't be as big as Intel. Because if you look at Intel's analyst estimates on Intel are 85 billion in the same year that AMD is doing 38 billion. Now, they could be wrong on both of them, one of them, none of them. The point is, we don't know the future. But I like to encourage people to go to the future with more cautious outlook on a company. You want to find something interesting about AMD? Forgot to show you guys this. AMD in 2000 was the big hit. It hit a high in 2000 of $44.44 in April of 2000. It took until 2020, January of 2020, before AMD hit that high again. 20 years later it took. Why? Because in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And in that time, though, if you overpay, back in 2000, they did $3.9 billion in revenue and $350 million in profit. In 2020, they did double, for 7.65 in revenue, double the revenue, and double the profit, 600 million. That means 66% more. So they had a bigger business 20 years later, and the stock was still the same. And in that time also, the stock went as low as like $1 a share, I think. Yeah, $1.60 back in 2015. So guys, it's a very volatile business. They've been nipping at Intel's heels for a long time. Guys, I've got 2 laptops. One's got AMD, one's got an Intel processor. I don't know the difference, but they're both very good. But I'm not a gamer, so a lot of people could be different about that. But it's something to consider when you look at that stock price. All right, Analyst Estimates. All right, so guys, we're led to the Stock Analyzer tool. Now, you've seen a lot of our software. It's all available on your mobile phone. If you're interested in the software, please watch this video above. It'll explain all the software to you and how you can take advantage of our current special, which is $10 off. So check out the video to learn more about our software. All right, let's see when the last time I did AMD was. August 1st at 4:35 p.m. So I'm pulling it up right here. Let's go through my assumptions and see if I still like these. Okay, first off, revenue growth. I did low, middle, and high of 8, 12, and 16%. Okay, that's not bad. That's 16% revenue growth for the next 10 years. Would take it from $23 billion in revenue to $100 billion in revenue. All right, that's not unreal. That's not something that I go impossible. It's going to take a lot of effort, but it's not impossible. So let's give that to them on the high side. Low side, 8%. I think they should be able to do that. The computer chip market is growing 10 or 12% a year, according to analysts, for the next 10 years. That's highly likely, okay? Next thing, profit margin. Now, the profit margin here is all over the board. I'm doing 8, 15, and 22. 22 would basically match Intel where it was in its peak. Same with free cash flow. But you've seen here their free cash flow is much higher than their profit margin, so it gives me more confidence that these will eventually even themselves out. And as AMD grows, and they have a good gross margin, that means every extra unit that they sell, they can keep adding more to the bottom line. These bottom line margins should continue to increase. That's the good thing for AMD. Okay, now the PE, the way I do it for PE is you try to figure out what PE to pay for the company, what multiple of earnings and multiple of free cash flow to pay 10 years from now, which is where our analysis is going. Guys, we don't know, but the market average is 15. If it has good growth potential and you like the company, you think it has staying power, pay a higher multiple. If the opposite is true, pay a lower multiple. So here, I just went 16, 18, and 20. I do think it's a company that has good potential, has a good processor. Nobody's ever complained, not nobody's ever complained, but people really like the processor. So I'm okay doing 16, 18, and 20. Now, for my desired return is what return do I want in order to take advantage of this company? Now, I do think there's still a lot of headwinds for AMD. They still have Intel, who's building 3 factories, one in Ohio, one in Arizona, and one in Germany. They're going to be a big foundry. That means Intel can make chips for everybody else. That gives Intel a huge advantage in the marketplace. Does that mean they're going to crush AMD? Not necessarily, but AMD, I still feel like I don't know where the margins are going to be because we haven't seen these margins overall. So I still have to sit there and be a little apprehensive. Now, I put 13, 15, and 17% in here. I'm actually going to lower that. I'm going to go with 12, 14, and 16%. I'm going to hit the Analyze button. Now, guys, stick with me for one more minute. And remember, this software here will change the way you look at money and investing. It'll change your life. I guarantee that. Well, I shouldn't guarantee that. I speak with very high confidence that it'll change the way you look at money. So please watch that video above to the top right of the screen. That'll explain more about the software, to explain the $10 off and what you're going to get with that. But stay with me for one more minute while I explain these numbers. Boom. So guys, on my lowest assumptions, I have AMD worth about $20 a share. Highest assumptions, $85 a share. Middle assumptions, $47. Remember, guys, it's based on 12, 14, and 16% returns. These are not the values I give for the company. It means in order for me to make these returns, I got to pay these prices. If I paid today's price, though, and the low assumptions occur, I'm going to lose about 7%, 8% of my money. If the middle assumptions occur, I make about 4%. And if the highest assumptions occur, I'm going to make about 13%. So as you can tell, even the highest assumptions that I've factored in, which could be low, so drop in the comments if you think my assumptions are too low, too high. What assumptions would you do? Guys, check out the software. I appreciate your time. Thank you.